Hey guys, it's Marshall from Green Capital. Today we'll be talking about the RSI, or the Relative Strength Index. The RSI has actually been around since the late 70s. It's used as a tool for trading, buying and selling at specific points of the RSI. Some people really prefer it. It's very useful. Some people don't. For all indicators, it's really just a preference, depending on what you like, depending on what you don't. So the RSI is one of many that you can use as a trading tool. So yeah, we'll just jump right into it. So here we are, Tesla's chart for a 6-month time frame. Each of these candles is specific to one day of the market. And as you can see down here, this is the RSI. So if you go up to this little chemistry bottle here, you can go into the search portion of it and just type in RSI and then click it. And then you can add selected, and there you go. But see, I already have one, so I don't need another one. But once you go into that, you can choose your settings. It really depends on what you want as your length. Typically around 10 or 14 is the preferred for most people. Bought and oversold, that's used by almost every single person that uses the RSI. What we see when we use the RSI is the way it goes up and it goes down based off the price action. So overbought is over 70, remember. Around this, you should start feeling kind of picky about when you want to buy into a stock, just because it's so overbought, 70, and then like getting really high up there is even like up to like 90-ish. That's like, whoa, that's a lot. So then once you start going down, the RSI starts going down. And then around 30, in correlation to the graph, it's oversold. So that would be a good buying opportunity when you get under 30. So under 30 is good. Good buying opportunity. And then over 70 is definitely a time to be wary. Maybe start taking some profits on your moves that you've made. Hopefully, you bought around the 30 area. Now, when you get to around 50, that is a time when it's kind of undecided. So your profit to loss ratio is not what it should be in terms of like if you're just measuring it off of the RSI. When you measure yourself on the potential profits of a trade, you also have to measure the potential losses of a trade. So obviously you want to buy at the lows and sell at the highs. So if you buy in the middle, which is around like the 50 area, you're buying in the middle and it could go either up or down. So yeah, buying at the 30, like I said before, is the safer time, and then buying anywhere above 50 is starting to become like a. But you can't always rely on the RSI to give you very specific times to buy. The market is very random. As you can see over here, that's what we call a divergence. It's where the RSI doesn't match the price action of the chart. So if we followed this rule where you didn't buy over 70 or around 70 or even around 50, then you'd miss out on all that, right? So you really want to pair the RSI with other indicators or trend lines. So to take an important point is you can't always rely on the RSI to make the perfect trades. You have to excuse me, you have to pair it with other things that you deem are more reliable or just as reliable. Because when multiple things pair up, then it's more likely that it's going to actually work out. So like as you can see here at 30, it hit this long-term trend line that I made. It's just like a couple years, it's like a year old, I think. Yeah, it's very, very respected. And as you can see, it was at 30 there. But then if you look at it from over here, is in like the 50s, right? So not a good time. It's been in the 50s for a while in this time frame. But if you follow the rule of not buying in the 50s and above, then you'd miss out. You'd miss out on a lot. So you do want to look for a slight divergence though. So like let's say let me look for a spot here. Okay, so this would be a divergence right here where it hit a high, right? The RSI hit a high, and then Tesla kind of dropped down, and then it just kept going up, right? So, but the RSI stayed the same. Okay, typically, that's a bear, like a bear sign. So that means the RSI is indicating that there's less buying that's happening in these trades. Let's look at for another one. SQ square, one of my favorites. Oh, okay, this is a good one. So this is a good divergence. So, or like it's a bearish divergence, but a good example. So here you can see that it hit a high with the RSI above 70, and then the same level, maybe even higher, yeah, higher. It in the RSI it was much lower, right? So this is a bearish sign when it's around the same height, but or around the same levels, but the RSI is much lower level. So as you can see, we did have a pullback, and then it got to around the 30s range, and then that was a good buying opportunity. So there you go. Then it went up to 70, and then went bam back down again because overbought. So that is a good example of how you can use the RSI. I'm sure if we use the trend line, let me see if I can draw a trend line here. All right, so we'll use this trend line here. So when you use this trend line, you can kind of map out an additional use for the RSI or an additional pairing for the RSI to make it easier to see when the RSI is faking you and when it's being realistic, like this is overbought or oversold. So Square was trading in this channel for a long time, and as you can see, every time it hits 70, the 70 area here, it's also hitting this high part of the channel. So here again, you see 70, so that'd be overbought, and then this is like oversold, almost oversold, and then it's a good deal. Like it's in the 30s, so it's a good deal. And then this spiked up, not in the 70s, but pretty big spike up. So maybe you would want to take a profit, maybe not. Back down again, kind of in the 50s at this point. So this is kind of where you start to be like, is the RSI really useful? It could go up, it could go down. This time it went up, so it went up, and then in the 70s again, and then midway, which is actually correlating a lot with the RSI at this point. This is like exactly 50, and it's exactly in the middle of this channel here, right? So then see, this is where the divergence happens, where it was high up here on the RSI, and then the same level price action was much lower, so that's a bearish sign. So then it went all the way back down, and then it went into the 30s down here, right? And then if we correlate that with the trend line, that's a pretty good pairing in my view. It just popped right there, and then it skyrocketed back up, and then it hit the highs again of this high channel part, and then it bam went all the way back down. So now here it went below the trend line, and it was in this 30s. So in my opinion, that would be considered good buying territory, right? Depending on the news, obviously, we can see down here this blue and red dots here. The blue is the earnings call, and then the red is the conference call, right? So maybe some news came out that wasn't that great. So the RSI doesn't indicate good levels of fundamentals. It only indicates good levels of technicals. So it's more of like a trader type tool. Once something happened in the earnings call, we may not know what happened, but like if something horrible happened, then you really shouldn't be using the RSI to indicate how low the stock can go if they were like, oh man, like we lost half our business or something like that in one quarter, So just keep that in mind. Fundamentals are important. Don't rely just on the RSI or on the trend lines. We'll go over the trend lines again or another time. They're pretty simple, as you can see. But yes, down here again in the 30s, time to buy, baby. If you consider the fundamentals of a company to be strong, right? So I personally have 3 pairings when I buy into a company. I consider the fundamentals of a company should be good. I don't buy into companies that aren't great. And you should make sure that you're buying around like a 30-ish area if it's pairing with trend lines, right? So those are good deals. So yeah, I hope that that explains a lot about the RSI. If you do have any questions, please leave them in the comments. We're trying really hard to answer all your questions, and if you have any feedback on what we could do to make the channel better, that would be great. If you would like to reach us on Twitter, we do have a Twitter account. It is called Green Capital. Green Capital 5 is the name. We talk about everything. We talk about stocks, we talk about cryptocurrencies, we talk about business. Basically, we just talk about growing your capital. So please follow us on Twitter. Donovan is a great help. He's the other YouTuber that we're trying to like grow our following and stuff. So yeah, we also have a Facebook page called the Stock Squad or Stock Squad. And that was actually our original page. So if you have any questions, we also talk a lot about other stuff relating to growing your capital on that channel or on that forum as well. So yes, please hit the like, hit the subscribe. Thank you guys so much for listening, and we'll be back again in a couple days. See ya. Grow your capital.